Well, it wasn't that long ago that the Disney parks would be considered the grand jewel of theme parks in general and of the Disney company. As in last year, they brought in over 70% of the entire company's revenue. But a lot of things have changed, especially since 2020. And we've had some mainstream outlets openly talking about the price hikes that Disney has been doing. And we've seen a lot of fans have a lot of backlash toward Disney for not only the price hikes, but all of the changes that have happened at the parks in a very short amount of time. But now it seems like investors are also starting to worry about the Disney parks, as we have a couple of stories here that are talking about how Disney stock has been downgraded. So we're going to read through these articles and give some thoughts on it. So hi, I'm Jared with Capture the Magic. And the first one here we have is from Investopedia, and it is Raymond James analyst downgrade Disney, calling it a roller coaster they're getting off of. Says the Walt Disney Company saw its shares slide Tuesday as Raymond James analysts downgraded the stock, citing concerns about its parks division and said they're getting off the roller coaster. The analysts dropped their rating for Disney to market perform from outperform and maintained a price target of $101 on the stock. Shares of Disney finished 2.2% lower at $94.05 on Tuesday, and have lost about 4% over the last 3 months, though they remained 4% higher for the year so far. It says parks under pressure. The analyst said Disney's parks are under pressure with a questionable consumer outlook, which is that's a very interesting way to phrase that. I think that has a lot to do with the sentiment people have toward Disney right now, the price hikes that have been talked about by a lot of outlets. I think that probably goes into that. As demand slows from a post-pandemic surge, adding they, quote, find stock outperformance likely to be difficult until parks improve. Now, what did parks improve mean? Given this is coming from an investment firm, this has nothing to do with how the parks operate per se, but in terms of profit and revenue is, I think, what they're looking at there. Disney's iconic theme parks could also have to contend with more competition, with Universal launching Epic Universe next summer, the analysts noted. Then we'll jump over here to Barron's, as they have a little bit more to say on the matter here, but they say Disney stock gets a downgrade and why theme parks are a concern now. Rick Prentice is the one who downgraded it. That's from Raymond James. He goes on to say that he believes the company faces several challenges, most notably in the park segment, that will likely keep the stock from going much higher for the next 12 to 18 months. Says a lot of this has to do with consumer spending. Says demand is moderating after a strong post-COVID surge. Consumers are still digesting price increases taken in the past 4 years, and a questionable consumer outlook further complicates the picture, Prentice wrote in a research note. Parks revenue in Disney's third quarter came in lower than Wall Street expected, and Disney's third quarter operating income for its experiences unit, which includes parks, dropped. The company said in its third quarter earnings report that in July that segment revenue growth was impacted by moderation of consumer demand. That's a long-winded way of saying there's less demand in the parks. And, that could be for various reasons, but, they did note that consumers are still digesting these price increases. And with how Disney operates, a lot of people prepay for these trips. A lot of people had trips before COVID that they didn't take till, after COVID, maybe a year or two afterwards. So I think a lot of this comes into maybe people looking to go a second time, or they're just now looking to get into going to the parks, and they're looking at the prices now and being very much, especially during this economy right now, and just being very apprehensive, I think is kind of their nice way of putting that. On top of consumer demand concerns, Prentice noted that the competition is heating up. Comcast Universal Studios, which is only 30 minutes away from Disney World, will open its new Epic Universe park in 2025. It says, we view parks growth as the most important and critical factor for the Disney stock, and find stock outperformance likely to be difficult until parks improve. So them even saying, most people think about Disney, you think about the movies, and obviously Disney wants to think about Disney Plus. The stock price is very much reflective of the parks, given that they make up the majority of the revenue for the company now. So when the parks are struggling, that means Disney as a whole is going to struggle, which is exactly what they're pointing at here. Disney parks are going through their own changes, though, the company said at its D23 fan event in August, that its Magic Kingdom Park will get its largest land expansion ever, including the addition of attractions based on Disney villains and the movie Cars. The Hollywood Studios Park is also getting new Monsters, Inc. attractions. It says not all analysts are pessimistic either. Of the 32 surveyed by FactSet, 23 say the stock is a buy, 8 say it's a hold, and 1 says it's a sell. And someone who, and this is not financial advice by any means, I have done some investing, some trading in the stock market. And a lot of times you look at catalyst in terms of something of reaching a stock price. And some of these, they quoted at $100 as the price target and other things like that. I think the thing I would just point to is I don't see on the horizon for Disney what a catalyst would be for that stock price to really go up. I see a lot of potential of that stock price further going down. When it comes to this, I'm not surprised. So I think what you've been seeing is, the way that things typically go is, first off, people that go a lot to something, even outside of Disney, but let's just say for Disney, for example, people that go to the parks a lot start noticing these changes. And then eventually that gets into the media more. And then now you're talking mainstream media has multiple articles talking about the price increases. And then all of a sudden, they start seeing a dip in the demand. And then now you've got investors worried about this. So this is one of those things that trickles down to the point now where investors are worried. So I think this is reflective of kind of multiple issues going on here if you're looking at it from Disney's perspective. I mean, first off, if you look at attendance levels, they're nowhere near what they were in, say, 2019, but they have, increased revenue from Genie Plus and Lightning Lane, which have almost made them $1 billion since they introduced it. But the attendance isn't there, but they've made up for it with the revenue from that. But in my opinion, all along, it's been very short-sighted because Disney seems very focused on squeezing as much money as possible from every person that comes through those gates, which I think impacts the long term because it's not about how people feel after their vacations and do they feel like it was worth it and do they want to come back. So yeah, they may make money that one trip they come on, but are these people going to come back? I think you're seeing a lot of these people be like, I didn't think it was worth it. There's lots of other options out there. And now there's more increased competition on the Universal side with Epic Universe opening. So Disney's facing not only an issue within their own parks and how they've been basically operating them. You can also talk about maintenance issues, just, customer services and what it used to be. There's a lot of things on Disney's end alone that could perhaps worry investors before you even start looking at competition, which is something that is very much ramping up as Epic Universe is opening next year, which undoubtedly is going to have a massive draw for Universal. And I think Disney's perhaps best case scenario they're looking at is they're going to see a bump of attendance because of people coming in for Epic Universe. But on the downside of that, they also, if they don't get the bump in attendance like I think they sort of expect they're going to, they could be in a really tough spot given all the things that they did announce at D23 are not going to be ready, in my estimation, for at least 3 to 5 years, if not longer. Some of these you're not going to see until 2030, in my opinion. You could have a span here of 3, 5+ years where Disney really doesn't have anything to combat Epic Universe, and whatever impact Epic Universe is going to have on the market, Disney essentially will have no answer to. Outside of, I suppose, they're going to do parades and shows, but that's not going to draw people from Epic Universe over to Disney, to choose one or the other. I think that's more playing to the Disney fan base because these are things that they do like. And in my opinion, one thing I actually think would be good for Disney, and they could do this, I suppose, if they got desperate enough, which is bring back like Magical Express, bring back free fast passes. Now, that seems crazy. And I don't think they're going to do it considering they've almost made $1 billion in revenue ever since they introduced Genie Plus. But I think one of the things that is plaguing Disney in the long term is the nickel and diming, the microtransactions, everything being so expensive. You got the single pass attractions that some of them are over $25. Those are increasingly getting more and more expensive on top of the Lightning Lane multi-pass, which is $30-some per person. And then they're going to introduce this year the Premier Lightning Pass, which is going to be even more expensive. So I think what you're seeing on Disney's end right now with these things is I think they're very worried about this fourth quarter earnings report. And they're trying to boost up the revenue as much as they can to try and show not much of a dip on the revenue side, because if they show another weak quarter, which again, Disney themselves came out and said the demand is lessening going into 2025, so they're likely to see a dip in the fourth quarter, that stock price is not going to reflect very well on that, as investors are already growing weary. And as Epic Universe gets closer and closer to opening, I think this sentiment is only going to increase as the hype and anticipation for Epic Universe opening gets closer and closer. I think this is only going to reflect even more on Disney's end of things and not in a good way. So the fact that not only are investors looking at the their financials and not liking how that's looking and trending, but they're also starting to look at the competition, which again, you're talking about investors. They're not plugged into the theme park world, but they can see what Universal's doing and understand that this is a major threat to Disney. We haven't seen a major theme park open in over 20 years in the Orlando area. So it's something that they haven't seen for a very long time. Again, Universal is being very aggressive with Epic Universe, but they're not going to stop with Epic Universe. And so while Disney is counting on the things that they announced to be done in 3, 5, however many years down the road, and anticipating, the demand for Epic Universe is going to die down a bit, and then people will come back to Disney. What they're really not anticipating, and I don't think a lot of people know, is that, Universal is going to be very aggressive with this and keep adding into their parks. And by the time that those things are done, Universal could very well have expansion paths in Epic Universe. They could have areas they've added into the studios and Islands of Adventure side. So not only is the competition increasing a lot, but the financials, and I think the overall fan or guest sentiment amongst Disney is not good. I think if you look at many people, and you can look at this channel and many other channels, and we have a podcast we've been doing on Disney and Universal for over 7 years now, we've even seen people that still go to Disney, but the sentiment for Disney has definitely changed, and they will openly talk about how it's not how it used to be. And on some level, it may be a matter of time for many of those people start looking elsewhere at either cruises, Universal. Like, there's a lot of options for your vacation dollars. And I think ultimately the competition is a good thing for Disney. I think they will go through a period of pain, and I think it's going to depend on how they react to that. Now, Disney's also in some turmoil on some level because they're currently going through the process of choosing a new CEO. So whoever steps into that role during the midst of all this is not going to be setting in a ideal scenario, as I do think during this time period, when the parks are under massive construction in 3 out of 4 of the theme parks, Magic Kingdom, Hollywood Studios, and Animal Kingdom. At the same time, Universal is unveiling their brand new theme park, and it's going to be in the midst of the highest demand it's probably going to have. It's going to be a rough couple of years for Disney, and they're really counting on these things that they announced at D23 to make a big impact. And I do have some questions on some of the things that they announced, if those are going to really pull people into the parks a lot. I do think their biggest card they can play is the Villains Land. I think if they do that one right, I think that one could be a really big attraction for them and a real big moneymaker. But I think the question would be between now and then, how do they fare in all this? But its worst case scenario could be that Epic Universe has a much bigger impact than they anticipate. They don't get the attendance bump that they're assuming they're going to get from it, and they really have nothing to offer to combat Epic Universe because, in my opinion, they should have announced whatever they're going to announce adding to the parks 2-3 years ago to speed up this timeline. So it makes sense, looking at it from this perspective. If I'm an investor, there's a lot of uncertainty when it comes to Disney on a lot of levels, considering that the parks are the biggest driver of revenue for them, and that's where they're being met with a lot of fan sentiment issues and a lot of competition coming up. And the thing that has to be looming out here that I don't know if a lot of people are talking about is you do have Nelson Peltz, who has openly said they're going to be watching the stock. If they continue to see this stock decline, you very well could see a scenario where Nelson Peltz steps back into the picture looking for some board seats. And this third time around, he very well could get those board seats, because it would really be hard to argue with him after the last 2 times he tried. And essentially, Bob Iger fought him off, promising a lot of things that they were going to do, and seemingly not coming through with a lot of those promises. And I think, again, the sentiment has soured more and more on Disney during that time period. So not only would, Disney be fighting against Epic Universe and fighting against, the fan sentiment that they have and what's going on in the parks, but they also could be dealing with somebody, trying to get, he's an activist investor in terms of he gets onto boards and tries to, change them and turn them around. They could be dealing with that at the same time as also they're dealing with finding a new CEO. So again, there is a lot of things going on with Disney. Not many of them are looking good, other than they did have some good box office success this summer in Deadpool and Wolverine and Inside Out 2. But the movies don't make near as much money as the parks division does. And I think Disney could be very well just looked as a theme park company, if you really want to think about them that way. I don't think Disney wants to think of themselves that way. I think they would like to be much more looked at as, say, a Netflix or, a movie studio. But as it stands now, the theme parks is what makes them the most money. And it's a lot of uneasiness on that side of things, because this is very uncharted waters for Disney. They're not used to the competition that Universal is. And I think maybe just now they're waking up to really how much of a threat Universal really is. And the bad thing for Disney is they may have recognized this too late. But either way, that's going to be it, though, for this video. If you like this video, please like it and subscribe to the channel, as we do lots of coverage here of Disney World, Universal Studios, Epic Universe, and pop culture. And let us know in the comments, what do you think about this story, and how do you think things are going to fare for Disney going into 2025? And until next time, we will see you in the parks.